Welcome, 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 everyone. I am excited to connect with you and to get started with the Bitcoin bounce back framework. This has been a labor of love to make sure that I carefully curated everything so that, I did all the heavy lifting so that you don't have to. I'll share more about my experience a bit later, but welcome to everyone who is coming in now, to Demetria and Bonnie and Kathy and Richard and Tiffany, and just have a bunch of people. I always hesitate to start naming names because then we might run out of time. But I'm so excited to see so many people. And I did receive, if you sent an email with questions and you didn't want to necessarily answer or ask during this session, I've got you covered. And I just want to start out by dropping in the chat, and I want to make sure the chat works and everything is up and running where you are connecting from. I have a couple more questions when I start sharing my slides here, but just where are you from? Right now, I am in central Pennsylvania. We have somebody that's hailing from Philly. Usually, this is always really interesting when I ask this question. We've gone straight international. It'll be interesting to see if we have anybody who's actually not in the United States. That's always fun. But it also shows not only the power of the internet in terms of information, but also in terms of community and value. Shout out. I know, think I need to switch this so that everybody sees. Let me get this to everyone. So let me try this again to make sure that everybody can see everybody's information. So I'm going to try there. Hey, everyone. And there we go. All right. I think I got it. I got it set up. I'm a one-woman band. So every email, every text, every ad, every webinar. I'm a lean, mean teaching machine, and I'm really excited to be here with you. All right, shout out everybody. There we go. All right, so let's dive in. I want to make great use of your time today. As I said, this is a session where you actually learn something and get your questions answered. At the end of this, I have an opportunity for you to work with me. If it resonates with you, I would love to have you as an insider in the community or for the DIY version of my course and my program. If it doesn't resonate with you, if it's not for you, if it's not the right timing, that is fine too. I'm always going to leave you better than I found you. And so if you don't do anything else today, being here to receive this information, and also I wrote a little book. It's called digitalmoneydemystified.com. I'm going to drop that in the chat too. Right now, depending upon when you watch this, because this is the live version, I'm connecting with you today, May 18th, 2024. But if you watch the replay after, it'll be available for a limited time to everyone who registered, and then placed in the video library for insider members after that. So you have a limited opportunity after this to watch. And I don't always do live presentations. So when I'm not doing live presentations every week, this is also offered on occasion. It's not a regular thing, but every so often I'll run a reprise or a second look at a live session. All right, but you all, Kathy and Dimitri and Bonnie and Richard and more people are coming in. So I'm not able to give a shout out to everyone, but I'm excited that you all are here. You are here today with me live. And so I'm going to leave you better than I found you. Let's start with a screen share so that we can get this party going, get this party started. All right, drop a +1 in the chat if you can see the slides. Nothing worse than me going on and on and on. And you not being able to actually see the slides. You would think that after an entire pandemonium that we would all get this right. All right, thank you. Thank you so much. All right, let's rock and roll. So the second question that I want to ask you today, the first is where you are connecting from. What is your biggest concern about Bitcoin? Is the one that we're going to focus on today when I get into the heart of my remarks. But, when I think about even writing Digital Money Demystified, I probably believed or had the fear or the concern about cryptocurrencies that many of you have had as well. So, for example, one in the chat if you thought or think it is too complicated, and I will address that. Two in the chat if you think it's just too risky. You're curious, but just the risk of it all seems just too daunting, and you'd rather play, you'd be cautious and safe. Or maybe it's like, you know what, this is interesting, but it's a passing fad, here today, gone tomorrow, and I just don't want to risk my investment and my retirement on something that's here today, gone tomorrow. And then, of course, and I certainly believed this in the beginning, that it's just illegal for the dark web, only about drug money or something like that. Certainly believe that too. And it's one of the myths. Now, so it's an interesting thing about myths, and I'm looking at the chat. I see a bunch of too complicated, a few too riskies. Uh, I see too risky or passing fad. Yeah, I get it. I get it all. That when I sat down to write Digital Money Demystified, I wanted to answer those questions for myself. And it's a funny thing about misconceptions, disinformation as well, when people intentionally inject confusion to keep people on the sidelines where they're actually making money. Shout out to you, banks. Shout out to governments. We'll talk about you in a moment. But so I wanted to right size the conversation. I'm a full tenured professor at Penn State Dickinson Law School. I have a co-hire appointment at the Penn State Institute for Computational and Data Sciences. I'm licensed to practice law in 4 states, New York, New Jersey, Pennsylvania, and DC. I've been out of law school. I was the editor-in-chief of my law school at Howard University School of Law. I take education, I take my money, I take my family, and I take my reputation very seriously. So it was really important for me to address all of these concerns so that I would feel comfortable. Even initially, if I didn't invest personally, I had a responsibility to educate the next wave of lawyers to be conversant in the space, to understand regulation, legislation, the judicial decisions in this area so that they would be ready. And as it turns out, I fell down my own little rabbit hole. We'll talk about that in a moment. But if you believed any of those things, you are in excellent company. I did as well. And I had to work through, sometimes they're just completely wrong. Like crypto is for criminals. You can't tell from the headlines. Shout out Sam Bankman-Fried. Have fun in jail. We hope to never see you again. But it actually is the exception, not the rule, because of the nature and the way that cryptocurrencies and blockchain technology work. We'll talk about that in a moment. There's a company called Chainalysis, and I want you all to have this on your list of homework at the end of this session to check out Chainalysis. I use a lot of their data and their research in my book chapter on crypto is only for criminals, to debunk, to address that myth, to right size the conversation. And what I learned was that less than 1% of cryptocurrencies are involved in illicit transactions, and that the number one currency involved in illicit transactions, in fact, I'm not even going to say it. If you know, just intuitively, what the number one currency is that is used in illegal transactions, drop it in the chat. Let's see. This is your first little spot quiz. What is it? What is the number one currency in the world? Drop it. We have one, it's a Bitcoin, number one currency in the world used for illegal activities. This is going to shock you, but I'm going to let you know it's the almighty dollar by a long shot. A long shot. Absolutely. Cold, hard cash. Cold, hard cash. That's exactly what it is. I was shocked. I don't know about you. If you were shocked, let us know in the chat, because it was clear to me that it was some form of cryptocurrency. As it turns out, blockchain forensics, meaning the ability to connect the dots between different wallets involved in illicit activity, literally leads the Department of Justice to be able to recover millions upon millions of dollars in the equivalent of Bitcoin and other cryptocurrencies. It's based upon the nature of and the transparency of how transactional data is organized. I was floored, and maybe it's just me, but I can't believe it. So let's also quickly talk about how much you know about crypto. We have some people who are starting to drop in the chat. Not much, just happy to be here, just enough to be dangerous, or I'm Satoshi Nakamoto, or Who the heck is Satoshi Nakamoto? Which I will answer in a bit as well. Nice. All right. I love the transparency. I love the authenticity. I love the honesty for sure. Who is Satoshi Nakamoto? In fact, I'm not even going to wait till a later slide. I'm going to tell you right now. Satoshi Nakamoto is the pseudonymous character, could be a man, could be a woman. Most common wisdom believes it's a small collective of people who actually got together to create the Bitcoin software and to initiate the first transaction. And since we don't know, I'm going to say it was a woman, a soul woman who changed the world, because until we know, we don't know. Most people don't know much, but I'm happy that you're here. So let's float on and let's get you from where you are right now by the end of this session to where I hope you will be. And I'm certainly the reason that you're here with me today. Welcome for those who continue to come in. In order to talk about the power, the pitfalls, and the promise of cryptocurrency generally, Bitcoin in particular, I want to start start you at a place where I had to examine. I have a lot of educational privilege. I went to Northwestern University in the late 80s, early 90s. And then on to, as I mentioned, to Howard University School of Law. My father's a surgeon, retired surgeon. My mother's a retired patent attorney. I have a lot of educational privilege. I never knew just fundamentally what money truly is until I had to really excavate this area of cryptocurrency, and certainly to teach blockchain, crypto, and law at Penn State Dickinson Law School. So I want to start us just with what is money? Money, this concept is really a social contract. It's a social agreement. It's a type of social agreement that requires trust. It requires that a sufficient number of people actually have it to make it valuable, and useful, I should say. You have to have merchants who accept it. Also meant that identify it as an official currency. When a government issues currency, it's called fiat, government issued fiat or currency. And society as a whole has to trust that when you receive money, that it will actually hold its value today and in the future. And the future could be tomorrow. There's some nations where the minute you have the local currency in your hand, it's not worth the paper that it's printed on. Or and so it made me also think about even before maybe coins and paper money, we've had a concept of money, and underneath that, this concept of value for millennia, as long as we've been involved with trade. I think money really started as debt, you know, representations of value, the ability to keep track of what is owed, what is paid to a sovereign, what is paid within a culture or community or outside of that when communities, cultures, tribes were exchanging with each other. And we've had all of these representations of value over the millennia: seashells, salt, sugarcane, other commodities, gold and silver, the things that are inherently valuable. Make some shoes and you'll exchange the chickens that you've raised, right? We can make an agreement either as a fungible asset where it's roughly all this, it all equals the same amount. $1 is the same as another dollar, even though technically they do have different serial numbers. For example, a dollar is a dollar, gold is gold, silver is silver. But then you have chickens that have their kind of non-fungible but inherent value versus shoes. We could come to an agreement of that. But let's talk about the who, what, where, when, why, and how of money to start to explore our beliefs and our belief systems of what money is, how it connects within a country and across the world as well. So let's talk about what is money. We have here a credit card. Is a credit card money? We have the ability to swipe and pay for things having never touched physical money. We have a transaction. We have an exchange of money for goods or services. It's a way of moving money, but we're still using ones and zeros from software, not actual physical money. Is online banking money? So the idea that we can sign on, again, we're dealing with ones and zeros software that allows us to move money from where we are in Pennsylvania to somewhere else all the way around the world with online banking or our mobile payment apps money. Is there a way to exchange money when we're moving value electronically within PayPal or Venmo or Cash App, Alipay, depending upon where you are? Or is your direct deposit money? I hope the heck it is, because I look forward to seeing it, but I don't actually have someone coming to my door and handing me a suitcase of cash every month when I get paid. So thinking about direct deposits and the movement of electronic of value from one ledger or record to another in digital form. A wire transfer money? Is it actually moving money? Again, we're still dealing with ones and zeros in digital form. Online trading platforms, if you sign into Fidelity or Vanguard or BlackRock or E-Trade, is the value that you see with the ticker symbols, is that money, right? Is Zelle money? You can move the ones and zeros instantly through a bank system. Or is this money, the hard Benjamins, baby, all about the Benjamins? And the point of this, obviously, is that, the idea of having an ability with electronic means to move money, move value, is a social contract. It's an agreement that we all share. We have a reasonable expectation that when we push a button and we sign an electronic transaction, that value is going to move from one person to another. It moves off of my ledger, my record in my bank to yours around the world. And each time it moves, there's some intermediary involved that's extracting value. The price of the ability to move my money from place to place, so that when I move $1,000, by the time it gets to where it is, there are all sorts of fees attached to it, right? So digital transactions, money is already digital. Our financial systems are largely digital. And hopefully that highlights for you that our money exchange is already conducted electronically. You are involved in electronic transactions every day. The issue is who the issuer is, who the intermediaries are that are involved of you moving your value from point A to point B to point C, and so on. With that in mind, let's talk briefly about what cryptocurrency is. It is yet another option, another way, another ability to move value. This time, though, we're not going through an intermediary. It doesn't go through a bank. It is not issued by a government. It's created by a community based on software that is visible, that is something that you can review and audit. You can see every transaction in real time. It's public facing. It's digital money for a digital age that is secured with a technology called cryptography. That's where the crypto comes from. Crypto doesn't come from cryptic. It comes from cryptography, which has also been around in some form or fashion for millennia. The idea that you can encrypt a message in one place and move it to another. Cryptography was used most often in war when it was very important to move a message from one place to another by secreting it, encrypting it with a key or some type of secret password that would unlock on the other side. And so cryptography is used for not just the exchange of information. Now the message is value. And it's using the technology that was very popular in the late 90s. Shout out to my Gen Xers who are we aren't digital natives, but we're the first digital immigrants to really use AOL and Netscape and its progeny. But this idea of using peer-to-peer technology at one time to move MP3s, drop in the chat if you remember peer-to-peer technology, Napster, Grokster, the little +1 in the chat. I remember that well. Also, as an intellectual property lawyer, a lot of that was moving copyrighted information, is copyright infringement, but now using peer-to-peer technology to exchange value. Shout out to LimeWire. I can't confirm or deny that it was used. Mistakes were made. But using that same technology in order to move value, incredibly powerful, where you retain more of the value from person to person. Obviously, it's only as good as someone wanting Bitcoin or Ethereum. We have huge communities, and Bitcoin, in fact, was first launched in January of 2009. January of 2009, the first block of Bitcoin transactions was secured. The first 50 Bitcoin came into existence, and there will always and ever only be 21 million, 19 million of which are already in circulation, where still fewer than 8% of people around the world hold Bitcoin. You are not too late. Obviously, the best time would have been in January of 2009 when it was literally worth nothing. In fact, Bitcoin didn't actually gain some value until its first official transaction where someone exchanged, we call it annual or National Pizza Day, where someone gave, I think it was 3, 4, or 5 Bitcoin. Today, it's like mind blowing, given the fact that Bitcoin is worth at presently 66,000, and this year in 2024, it reached its new all-time high of 74,000 before retreating back into the 60s. At that time, I think it was in 2013 or 2014. I don't have that statistic in front of me. I always like to be accurate, so don't hold me to the number of Bitcoin or the year, but the first viable transaction was paying several Bitcoin for 2 pizzas. Crazy, amazing. So think about this idea of Bitcoin as a peer-to-peer way to exchange value. It's not issued or backed by a government per se, although El Salvador now recognizes Bitcoin as an official currency because evidently it was much better than the local currency. And in fact, Wisconsin here in the United States has now added Bitcoin to its ledger, its state ledger, which is absolutely phenomenal. Shout out to Wisconsin. These things are happening. They're not reaching the headlines, which is why you have me to carefully curate information so that you can compare and contrast some of the salacious headlines about how bad cryptocurrency is with all of the positive moves done at the local, state, national, and international levels. Bitcoin is also, it's difficult to actually create because of the nature of the software program that allows for checks and balances, but also it's impossible to copy. And so solving for in the electronic realm, the peer-to-peer issue where I had a perfect MP3, but you could have it and 1,000 of my not so closest friends on the interweb. That might be great if somebody wants to share media files, but it's not great when you consider a double spend problem where if I had old school checkbook and I have $1,000 in the bank. I write a check for $1,000 to Richard. I write $1,000 to Kathy. First one to the bank wins because I only have $1,000. That's not a great monetary system, and that cannot be done with Bitcoin. But it is highly divisible. It's not like an all or nothing thing like a stock, where you have to, unless you have a mutual fund and you can buy shares, for example, of a basket of assets. It's all or nothing on the stock side, right? When you're buying ownership in a company as a shareholder. Here, you can literally buy $1 worth of Bitcoin. And I highly recommend that you do. This is not legal or financial advice. This is for educational purposes. But the idea of having a small amount and buying that over time, if you woke up tomorrow and Bitcoin was gone, that you wouldn't jump out of a window. Like, this is where we're talking. Everybody's different. Everybody has different goals. I know there are millennials here today, the Gen Xers, baby boomers. We all have different life stages, ages, and goals. But it's the monetary system of Bitcoin and other cryptocurrencies is defined by rules, not rulers. And that's an important concept from the crypto community that I want you to hold on to as well. And the final thing about the technology, because I really want to keep this at a very high level. If you're interested in diving in more, I have sources on YouTube. I'll talk more about my Insiders membership club as well. But I'm going to drop the information into the chat of finding the company channel on YouTube. Look for @Advantage Evans. I have, so much content there that you can kind of dive into in addition to joining as a member or just doing it for yourself. Blockchain is like a group text at a certain level. Blockchains really are just digital records of transactions and balances. And I like in a very high level to compare that to a group chat because you might have 8 people in a group chat and you delete that record of the conversation from your phone, but as long as the 7 others or 6 others or 5 others or 4 others, at least one other phone has that information on it, that conversation persists. And now extrapolate that to millions of computers around the world. That's the idea of having a decentralized way to share the same software and therefore share the same truth of the state of the transactional record at any given time. That is also extremely powerful as well. Now, I want to jump into kind of the part of my remarks to also take a new look and reimagine what it means to have income versus wealth. They are not mutual, they are not the same. They're not income taxed at a higher rate. Wealth is something that you can focus on, an asset that actually has a return on investment. So that is capital gains. Those are capital assets, not to be confused with the income that is earned by you showing up somewhere to do something. The idea, when you transition from the idea of a high income earner to a wealth producer, where you're producing and protecting and growing wealth, you are investing in assets and opportunities and businesses that do not come back into your house void. They're actually out in the world working harder than you. When you have your assets minus your liabilities, that's your net worth. Almost every American, regardless of your pay band, as a matter of income or your wealth, and most people have their wealth in their home if you can actually afford to buy one. You have your assets, but then you deduct your liabilities. Most Americans are drowning at every level in credit card debt or consumer debt of some sort. In fact, I really feel like middle class just means you can actually get debt, which is like the new slavery. You can get a loan for a home and for education for yourself, for your children, whomever, and then you will be under the weight of that debt forever. The fact that you can have a great FICO score just means we're always going to have you indebted to us, but apparently you pay on time. So here's more debt, right? And then the other side of that is high income. I've been a high income earner from the moment that I left law school, went immediately into 6 figures. And every level has a new devil for sure, but that is certainly not wealth because it's in one hand and out the other at every pay band. And so we need to get clear about what that means. And if you are a person of color, if you are a woman, someone else who's systemically marginalized and not participating fully in whatever this American dream is, the United States, for example, then you know that there's a sizable wealth gap as well. And there's a recent statistic that said if you keep doing this, if we all as a community keep doing the same thing, it will take 246 years. That's changing nothing, not changing the world, not changing what's happening. And we know that the only constant is change. But the idea of closing that wealth gap, you have to find some first mover opportunities that is different from what we are doing now, because the traditional approach is just not enough. It is no longer enough. I want you to commit to do every traditional thing. I'm actually quite conservative about my money, about my value, about my assets. I own very few cryptocurrencies, but the ones that I do, I go in deep. And I've been doing this since 2017. So what would be comfortable for me may not be comfortable for you today. But figuring out that, yes, do I want some type of income? Probably some type of income. I'd rather have it from my assets, right? And have capital gains at a lower long-term tax rate than income, for example. But I'm going to do all the things. I'm going to max out my retirement benefits. I'm going to make sure that I have a sufficient amount of money in my health savings account. I'm going to have insurance, which I do. I'm going to own homes and rental properties, which I do. I'm going to do all those things. I'll manage debt, which I do. Those things are not enough to close the wealth gap. Why? If you're relying just on high income or a safe play for very small returns, one of the biggest issues from government issued fiat money or fiat is something that Alan Greenspan said, and we're suffering from it now when you think about inflation and inflationary policy. Alan Greenspan is famous for saying, we'll never not pay our debt because we can always print more money. We can print our way to fund a war. We can print our way to stimulate the economy. Shout out the stimmy checks, right? That's not great when you water down in money. And that is not within our control. That's within the control of politicians. Now, politics is the allocation of resources, and therefore politicians are in charge of doing that. And in our form of government here in the United States, a republic, we the people put people in positions of power to allocate resources. That's what politics is. The idea of printing money to do that is of concern because you buy things today that are the same, the gas is the same, the rent is the same, the milk is the same, the eggs are the same, but what's not the same? The prices. Or this idea of shrinkflation. Shout plus 10 if you know what shrinkflation is. This idea that we have the same packaging, but there's not as much stuff in the actual package. We're all suffering from that as well. And what is a way to counteract that? Is to know that you are involving yourself in addition to whatever income that you have now with capital assets, assets that grow and generate revenue, buildings and land, stocks, bonds, businesses, intellectual property, and also cryptocurrency. Cryptocurrency is taxed in the United States as a capital asset. In fact, if you remember from April 15th, or was it 18th this year, at tax time this year, on the 1040, in the first third, that first, the top of fold that we say, they ask your name, your address, and above that, in that first third, you may have noticed that they also asked, have you purchased, acquired, otherwise obtained cryptocurrency? They ask that before your dependents. So that shows how important it is. It's also it's legal, not illegal. But Uncle Sam wants his money. He said, you're going to run me my check. There are a lot of people earlier in crypto who believed that crypto was outside of the existing system. It is not. You got to pay Uncle Sam as well, but understand that crypto is a capital asset. It's one of the best because of its volatility. Where there's great risk, there's also great reward. What I teach in from Cash to Crypto program is calculated risk, being the prudent crypto investor, not betting the farm, for God's sake, doing all the traditional things. But if you choose not to invest in cryptocurrencies, or at least at this moment in time, continue to learn so that you are informed, therefore less likely to be taken advantage of and more likely to be able to leverage crypto as part of an overall portfolio strategy, then you are choosing to opt out of wealth gap busting opportunities. And the power in cryptocurrency is that the choice is yours. The choice for the potential for high returns, risk and reward is not the absence of risk, but actually making money, building assets, protecting your assets, and having something at the end to pass on to future generations require calculated risks and also not putting all your eggs in one basket. If all of your eggs are in a home or all of your eggs are in a retirement account, we are doing this wrong. And I say we because I've had to undo a lot of things and relearn, reimagine what my future will be like as a Gen Xer. My maternal grandmother lived to be 103 years old. She's like the only person I know that actually just died of old age. In fact, her last words with a number of our family members around when she passed back in 2012, and she said, all's well that ends well. Okay. Went to sleep that night, then wake up the next morning. And that's like a beautiful thing that gives, as much as I adore my Nana, the idea that she went out in her own time, in her own terms, amazing. So God willing, I'll continue to live. I'm in my mid 50s right now. Hopefully I got another double nickel left in me, right? And so the idea of diversification, exposure to emerging projects, global financial accessibility, because crypto is not beholden to a particular border. I travel a lot, so I can take my a crypto wallet that is installed like any other app on my phone and travel the world. go to St. Martin, go to Portugal, go to Switzerland, go to wherever, you name it. And I don't have to exchange with local currency. I don't have to use fiat from the United States. I can actually use a wallet and actually engage in transactions. Now, I wouldn't recommend that for my Bitcoin, but there are thousands, literally thousands of coins and tokens. In fact, I will share a free resource, coinmarketcap.com. You can pull that up. You can see every coin and token in the world. You can, and the price every second of the day, because crypto is 24/7, 365. There's no Memorial Day, there's no holiday, there's no banker's day, there's no banker's hours. That's part of my concern the reason why I'm not a day trader or a swing trader. I'm a long-term investor. Because as when I think of my own risk tolerance, I'm not going to stay up for 24 hours staring at a screen trying to gain arbitrage between coins and tokens. I don't have time for that. I support you if that's what you want to do. I have great resources inside of the Insiders program for you to do that. Shout out also to Terry Egioma. She's an amazing swing stock trader. I learned a lot from her, and we use some of those principles when people are interested in doing the same in the crypto space. Not Terry. She focuses specifically on stocks. But the point is, you can use those strategies from the stock world in the crypto world, but with a caveat that crypto is 24/7, 365. So my heart and my mind, body, spirit rest nicely at night, knowing that I'm a long-term investor and it's a small but meaningful. I'm a little overweight in crypto, but it's a necessary part of an overall strategy, but it's certainly not all of it. But I know I'm taking advantage of a major way of a first mover advantage. Crypto right now, and any investment, is not the absence of risk, but again, calculated risk, diversification, and a first mover advantage. And so what I wanted to do is show you how when you do an overlay of existing markets, like I'll show right now, we're looking at the Dow Jones Industrial Average, all the way back from the early days up through the present day. This latest graphic comes from April of 2024. And it's always when you're looking at one day, 1 hour, one slice, it could be like the end of the world, or, happy days are here again. Just that one slice. You have to look out and take a wider view in order to say, at the end of the day, as a long-term investor, are things moving up and to the right? If they are, I close it down. I do not look at prices every day. I do look at the markets and what's going on every day. It might be something that happens as a matter of macroeconomics, something that wasn't caused by crypto, but impacts crypto. I need to know that, stay on top of it, so I can keep my insiders and you on top of your game. But I wanted to show this up and to the right movement, even with the lows and the highs, and you can see them here and where we are today. We also know the market just broke through 40,000. Like, it's mind-blowing. So everybody's saying the economy is terrible. Someone forgot to tell stocks. Someone forgot to tell the few companies that are basically driving economic policy here in the United States and around the world. They're killing it. Right? Well, we're trying to figure out why the hell eggs are so expensive and rent is too damn high, right? What do they know that we don't know? They know this. This is the New York Stock Exchange, known for its volatility. I mean, look at this. If I didn't tell you this was the NIS, we might think this is Bitcoin because of the highs and the lows as it goes. But is it over time? If I had a line drawing here up and to the right, absolutely. Do we have any expectation that even with its ebbs and its flows that it will continue in that trajectory, unless and until there's the great demise of the United States? That's a story for another day. That's not this webinar. That's another one. But we do want to pay attention so that we can be proactive rather than reactive. Somebody put in the chat, proactive. Let's be proactive about this. Take a wider view. Here, as we think about this, going back to the NIS, for example, and then showing what Bitcoin looks like. Obviously, these peaks in values are like a roller coaster. My goodness, an absolute roller coaster. But guess what? If we are drawing our line, are we going up and to the right? Are the previous lows, generally speaking, higher than the new highs? Excuse me, the previous highs all of a sudden become lower than the new high. This is when we hit 74,000. And the price predictions are really, really mind-blowing. I tend to be extremely cautious and somewhat conservative about price predictions, and I don't regularly make them. But what I want to show you is that when we're comparing Bitcoin, for example, to the Dow Jones and to the S&P, et cetera, we have traditional markets here. We have Bitcoin is the solid blue that is outpacing by a long shot and still going up and to the right. This is the time to take a serious look in whatever way that is meaningful for you, wherever you're meeting your risk tolerance, and also reassessing what that looks like. Can you take a calculated risk of a 1 to 5% of an overall portfolio? In order to answer that question, what does the overall portfolio look like? And if you're starting today, this is a great day to start. The one day that was better than today is when? It was yesterday. And you're tomorrow, Sunday, whatever action, whatever next right step that you take after this session, you're going to thank yourself for moving forward. This left side of the screen is a screen capture from CNBC from Q1 of 2023. And it was the best returns for the remainder of last year. And the top fives, we have 2-year treasuries that panned out. The QQQ, that panned out. Oil's always going to oil. Trust and believe that. S&P 500, it did some magic stuff. And guess what also did some magic and outperformed this conservative estimate, Bitcoin. The folks who watch CNBC every day or Bloomberg every day, they know this. While we're watching whatever it is we're watching, the 1% of the 1%, this is what they're focusing on. While the headlines tell you this is too difficult, too volatile, drug money, just a fad, this is what they're talking about. This is Larry Fink, the CEO of BlackRock, the most conservative, and they're like two juggernauts. There are many juggernauts. This is like a super juggernaut. BlackRock and Vanguard, known everything. You throw Fidelity in there for good measure, but Fidelity's trying to holler at BlackRock and Vanguard. Larry Fink says, and he was a big opponent of Bitcoin, just like Jamie Dimon from JP Morgan, could have never predicted the amount of retail demand for the spot Bitcoin exchange traded fund. Exchange traded fund, a regulated product. There are 11 of them now available. BlackRock is one of them. Fidelity, ARK Invest, Grayscale. Full transparency, I am a member of the board of directors for Digital Currency Group, and one of our holdings, we have a portfolio, as a matter of a venture capital firm of over 200 companies, but we wholly own Grayscale, which also has an exchange traded fund where you can have exposure to Bitcoin with actually not going through the steps of buying the actual asset. Now you can buy into a fund, one of 11 right now, and there'll be even more coming soon online, not just for Bitcoin, but also for Ethereum, which is driving up the price significantly. You can own shares of a Bitcoin ETF. It was approved by the SEC in January. Most people didn't get that newsletter. They didn't get the memo. They didn't see that headline. And their financial advisors darn sure don't know what this means. But you don't actually need them. You need a little bit of information. You need E-Trade or any other account. You go to Fidelity. Knock yourselves out. Use what you already have. A survey of millionaires find 73% own or want to invest in crypto. What do they know that you don't know? Bank of America hates crypto. Wells Fargo hates. But you know what they do like? Money. They want to keep you as a client. And evidently, some folks are starting to ask, hey, these 11 exchange traded funds, including one from BlackRock, are doing really well. One of the most successful exchange traded funds launches of all time. Second, I think only to gold. It's number two. Bank of America and Wells Fargo is like, oh my God, we're losing customers. This thing is actually a thing. We thought it was a fad. We thought it was, they need to get my book, Digital Money Demystified. Store near you. They're in now. Deutsche Bank back in 2021. This didn't hit the headlines. I found it. Deutsche Bank quietly plans to offer crypto custody through its brokerage firm Prime. For years, JP Morgan, shout out to Jamie Dimon, skeptical is an understatement of Bitcoin. Now the bank's analysts, say that its value could triple, challenging gold. This is what they're talking about. Visa, Mastercard, Fidelity. Here's an interesting, I wish I had this, when I follow up with you, I'm going to send you a link so that you can go to the Changely blog to see price predictions, the minimum price, average, and maximum, and where it could go right now. Again, we touched 74,000 this year. The minimum that most analysts suggest would be at 84,000 by the close of this year. We're in a current bull cycle. They tend to last about 18 months. And this bull run seemed to begin at the end of last year. So, think of it as a matter of timing. There'll be a lot of volatility across the board in assets as the election nears, and certainly after the election here in the United States. So you want to start preparing for that, cash on hand to be sure, and also realigning your portfolios to take advantage of dips and uncertainty. Because when others are fearful, you should be greedy, says Warren Buffett. And when people are greedy, you should be fearful. So pay attention to that. But some of these price predictions are literally mind-blowing. It's the same kind of conversation that probably people had with the stock market when we reached all-time highs. It was like 20,000 for the Dow. And people are like, I mean, can't go any higher than this. And then we see this year, what's happening there. So think about now, and I wanted to give you that context that your curiosity about crypto is right on time, because there are folks in circles of uber wealth that are having these conversations that don't know much more than you do. In fact, after you finish this masterclass, you'll be more well-informed than even your financial advisor, if you have one, for example. If you mention that you were doing this, or you mention after the fact to your some of your family or your financial advisor or your colleagues, they're going to think that you went crazy, much in the same way that mine did. I assure you I'm not. And I also assure you that changed the nature and quality of my family's life by having a little as a part of an overall portfolio strategy as I continue to learn and continue to grow my crypto portfolio. I had to analyze what was keeping me stuck. So I want to present that to you as well. What is keeping you stuck in this moment? We all know the saying that if you want to keep getting what you're getting, keep doing what you're doing. But if you want something different, and by different, I mean better, more secure, a way to strategize as a first mover to get ahead for the first time probably in your life, let's talk about that. Let's talk about that, because we fear what we don't understand. And so let's talk about some of the myths, and then we'll jump into the bounce framework as well. Some of the myths that I deal with in Digital Money Demystified, you see on the screen now. For those who are listening and calling in, what we see, 8 blocks if crypto is. I'm highlighting something that's a myth with the myth crossed out. So first, crypto is complicated. There are certain things that you need to do to educate and therefore protect yourself from scams, like the same scams that we get in email and text, unfortunately, at this day and time. They're scammers. We don't throw out the technology, the phone. We don't stop using text or SMS because somebody said, I will gladly pay you Tuesday for a hamburger today, or give me your bank account. I wish to send to you, God put it on my heart to send you $10,000. That's a scam. But the underlying money, the underlying technology is not. So you need to educate yourself to protect yourself in that way. But you're going to need to do that for any investment. You need to know the basics, what it is, how to acquire it, how to protect it, how it's taxed, how it fits into your overall strategy of wealth building. we're going to ask ourselves the same questions. And this is has the appearance because we have finance and we have technology, kind of like having a baby, and then it's crypto and it has to do with our money, and we don't play about our money. So learning the basics of any investment, including this, and that's why you're here, and that's what we're doing today, to either continue or to begin your learning and earning journey. I talked about this earlier as well, the idea that crypto is just for criminals, less than 1%. Only 0.34% of all activities in crypto are illicit. They're sensational. They impact a ton of people. And we don't want any of those players in the space. That actually also happened with the New York Stock Exchange when it first launched, which was the reason that the Securities and Exchange Commission was created in order to provide oversight, rules, regulations to protect investors. As a result of all of the things going on. We see the same thing happening in crypto, but not being secure. The data is secured. We talked about encryption and cryptography, and that's the way that it's secured and it's verifiable. You can go to the ledger and actually see every single transaction in real time as well, which makes it pseudonymous, not anonymous. That crypto is too volatile. I have an entire chapter that talks about the benefits of volatility. We've already seen it's highly volatile. That's not the question. It's the idea of crypto having shown stability over time. Is it moving up and to the right? When you think about just being for a certain demographic, only for tech bros. And actually, there's a survey, the Ariel Schwab Black Investor Report. Now, they're no fans of crypto, but I love the data that they called for they do this Black Investors survey every so often. The last time was in 2022. And for the first time, they included the Black crypto investor. Really interesting statistics about how Black Americans over-index in crypto ownership because it's the one thing where you don't have gatekeepers keeping you out. Like if wealth building is in a home, but you're redlined or you have an adjuster come in and give you a value on your home, for example, and it happens to be less because you have a picture of Martin Luther King, or it's apparent that there's a Black owner of the property. But if the same property was offered by a white couple, it would be 2, 3, 4, 5x in value. And these things happen all the time. In crypto, they don't, because the only thing that is keeping you from participating is your confidence, your risk tolerance, and a little information, which is going a long way for you today. But we've already talked about this idea of being unregulated. Law, rule, and regulation that applies also applies in the crypto space. It's already illegal to scam people. This is when I think about FTX. I see that in the chat, and Sam Bankman-Fried using a centralized exchange. Now, let me take a step to the side to address the FTX because it's so important and so many people got taken advantage of, not the least of which were large swaths of the population that don't have the luxury of losing and having a very costly lesson. Sam Bankman-Fried, owner and creator of FTX, created an exchange where you can go and exchange one crypto asset for another. By their very nature, they are not banks. They are not insured by the FDIC, but no exchanges. And this is no exception. If you're using an exchange, a centralized exchange, you are sending your assets onto a platform where that platform, Coinbase, FTX, Gemini, Kraken, you are sending it there into your wallet. And it's really like an IOU. You're ceding control of this asset for a short period of time and a specific purpose onto that centralized exchange so you can exchange one asset for the next. The minute that transaction takes place, you should be pulling your assets back off of those exchanges. Some people don't trust themselves, and those who left their assets on the FTX exchange, they got scammed, not because of the technology, not because of cryptocurrency, because Sam Bankman-Fried encouraged them to leave their assets on the FTX exchange, and in exchange for that, giving them a super high guaranteed interest rate, kind of like a yield. I think it was 8% or something like that. Way better than if you keep even a large amount of money in a bank. Like you might as well, you could find more change in your sofa for the interest rate, where the privilege of leaving your money in a bank, for example, where they loan you back that same money with interest and they keep the spread. Story for another day. So people left their money, their assets on FTX exchange, unbeknownst to them and without their permission. Sam then transferred those assets to his hedge fund, Alameda Research, without their knowledge and consent. Classic Ponzi scheme, classic shell game, like straight up Bernie Madoff, but with crypto, which is why Sam Bankman-Fried is in jail and in jail for a long time today. It took a shorter period of time to get Sam from the Bahamas, where he was first located, back to the States, tried, convicted, and in jail 1 year and a bit. 1 year and a bit. Way longer to try and apprehend. Where are the folks that scammed through Lehman Brothers? Sounds a lot the same to me, right? So that was horrific what happened. And I love what I'm seeing in the chat. Not your keys, not your coins, not your keys, not your crypto, not your keys, not your cheese. Keep it off of exchanges. I have a challenge that I do occasionally called Ready Wallet Launch. You can look for that at advantageevans.com, the same place where you went to learn about this webinar. All right, so if you're still with me, and if you're already better now, we're coming to the home stretch, drop a +10 in the chat, because I feel pumped. Every time I have to get ready for something like this, I have to learn something new. I have to hear what the folks are talking about on the crypto Twitter, what's going on at coindesk.com. But absolutely, my plan is always to leave you better than I found you. And let's take a collective breath and say, okay, I get it. I can do this. And I want to continue learning more. I think that's the most important part. This is not something that it's one and done. I learn something new every week, sometimes every day. And a lot of it has to do with focusing on what I have to learn at each given step. There's nothing that you will not know all the things about all the things. I took a deep dive at the intersection of intellectual property and blockchain technology and cryptocurrencies. But I don't know all the things about all the things. What I know pretty well. And I want you to have confidence in yourself. We participate in a culture and in an economy that teaches us very early not to trust ourselves, not to learn anything, not to worry our pretty little heads, do the safe and narrow, keep participating in the system, and never have any alternatives, and then you'll always be beholden to it. Saw that earlier in the chat as well. So let's talk about the framework. I've been thinking through this. I continue to develop it. So if you've been on a webinar before this, I continue to evolve this as a framework and starting to fill in the mortar, to the bricks of how to think about crypto investment, how to think about investment more broadly, and how to become a first mover with confidence in this space. And so the first thing I think about is, one, we talked a bit about it, but believing in the basics. And by believing in them, you have to understand the reason that Bitcoin exists, the reason that Bitcoin, in January of 2009, on the heels of the economic crisis that was going on at the time. In fact, the metadata, the note for the first transaction that Satoshi included with that first transaction for Bitcoin, recognized the headlines out of the UK about the economic crisis. Kind of like a God wink. This, it's a Satoshi wink. It's a way of identifying this is what was happening on this particular day, kind of like proof of existence on that particular day. You want us to understand enough, but if you have Cash App, for example, and you open it up right now, you will see that you're able to buy a very small amount of Bitcoin. I recommend that you do it. I actually have small amounts that I purchase on Cash App on a regular basis. Set up dollar cost averaging, where some certain amount is the same thing I do for like my retirement account, for example. Set it and forget it. I never see the money. It just goes immediately. You can do that on a number of different platforms as well. It can be a little more expensive in a Cash App environment. It's easy. But there are many other ways that you can do dollar cost averaging, where you can buy some over time. I'm sure, you can set up things like that on Coinbase, for example. In my community, we use Kraken. for our exchange. So there are a lot of things, but you understand what you need to know at any given time. And as you continue to participate, you have a little skin in the game. You're even more interested because you're literally invested in the outcome. The O is overcoming obstacles. The first obstacle is just mindset, straight up mindset. Learning to navigate market volatility, keeping abreast of regulatory changes. I recommend watching, a half an hour of CNBC every day. I hope that you are also a subscriber to my weekly, not so weekly newsletter, but I'm going to get better at that. The intention is to have a touch point at least weekly. If you're an insider, you already know, or will become an insider. For the membership, you know that we meet monthly. We do kind of like an office hours, a Q&A. We'll do like a mini masterclass on a particular topic, and then that is added to the video library as well. I want you to check in with your money and with your assets. Markets change daily, regulation changes daily, security options change constantly, so you want to stay up to date as well. Learning to uncover opportunities. This is one of my favorite parts of the framework and an area that we dive into in even greater detail. Where are the opportunities? My opportunities when I first started in the space in 2017 and into 2018, when I was actually flying around to educate other intellectual property lawyers about what was going on with blockchain. There were all these opportunities. There are undervalued assets. Those things change over time. Emerging trends. Excuse me once. And so thinking about the emerging trends is really important too. The other thing that's important, let me get a little water here. Another thing is nurturing your network, building a community, collaboration. That's critically important as well. And committing to continuous learning. Now, this is important because you want to stay informed. And again, because the market continues to evolve. So this idea of continuous learning, drop a resource in the chat. If your favorite thing is like, I don't know, YouTube University or some type of news outlet, where traditionally are you getting your information about crypto? Social media, family member, share some resources in the chat when you think about, I know for me, when I first started, all I really had was YouTube University and trying to figure it out. We have word of mouth, that's important. I see Market Mondays. Oh, Earn Your Leisure. Yes, absolutely. I think that's a great resource. Thank you for sharing that. I follow them on Instagram, and I think that's a really powerful duo for sure. There was one interview that they did recently, as an aside, with Robert Smith that I thought was amazing. If you all definitely look up about the power moves that Robert Smith, a billionaire, black billionaire, and Earn Your Leisure guys did something great with him. Anyway, I say all that to say, find your resources. You can continue to think of me as a ready resource. My YouTube channel, my podcast that is weekly every Friday. You can get that wherever you listen to your podcasts. And also Tech Intersect. I'll drop this in the chat. .buzzsprout.com would be a great way to keep up with what I'm talking about on a regular basis as well. That continuous learning. And then finally, the E imbalance that talks about exercising caution and strategy. If you're just like motivated by fear, this is a very dangerous place to be. And there are two types of fear that we focus on in the From Cash to Crypto program and the insider community. We talk about fear of missing out, FOMO, of course. Most of us know that acronym, but also what I call FOGI or FOGI. I'm not quite sure how to say it, but I made it up. Let's go with it. The fear of getting in. Both of them are motivated by fear, and fear is not a great strategy. So employing a strategic risk management and diversification strategy is where you find the prudence in a prudent crypto investor, and that's what I encourage you to lean into. A couple of other things that I wanted to mention that are happening now as I update this presentation continually is to make sure that these two opportunities for investing in retirement are on your radar. And this is a way, without experiencing the tax consequences for, in the case of IRAs, that you start investing in a Bitcoin IRA and stacking all of that exposure in a regulated container So it's a great way to have this in addition to whatever else you're building for retirement. Sometimes it's up, sometimes it's down. You're not putting anything there that you need tomorrow. We're planning for the fact that we're living longer than ever. And so I have a little bit more to say about each, but these two regulated vehicles offer different, but really fun and accessible opportunities to invest in Bitcoin in particular. Each have their own unique features. Talk to your financial advisor as you start to consider this. Go to the websites of the companies that offer these products. I don't want to steer you to any one in particular. Each is suited to a different type of investor and also investor strategy. So with Bitcoin exchange traded funds, and I was talking about these earlier, there's just the ease of access, first of all. So Bitcoin exchange traded funds have a really easy, protected way of having exposure to Bitcoin without actually purchasing Bitcoin. Me, myself personally, I like my own Bitcoin. Thank you very much. But in addition to my Bitcoin holdings, I also own hundreds of shares a Bitcoin ETF that I want to hold long. And I just feel like if you at this point are still learning about different types of crypto wallets, if you're intimidated by that and exchanges, at a bare minimum, taking a look at and acquiring Bitcoin ETFs over time with dollar cost averaging. They range in price and fees from about $22. So that's a far cry away from, $66,000 per Bitcoin, for example, even though, you can divide it up. You have stock market integration as well. So these Bitcoin ETFs are traded like I should say, traditional stock exchanges. They're bought and sold just like a stock, but you're not buying ownership in a company. You're buying a part of an asset, right? Risk mitigation. So if you have a very low risk tolerance, but you still want the upside benefits of Bitcoin, this could be an entry point for you as you continue to learn. So you're not sitting on the sidelines waiting until one day, and that day never comes. You talk about talking. This is a way to actually do. So you're learning while you're earning in a regulated product. It's efficient as a matter of taxes than other investment vehicles. That's why I love exchange traded funds. So there's an advantage buying parts of an ETF as opposed to the underlying asset, a both and, not either or, right? Liquidity, regulated framework, those are fantastic reasons to take a look at one of the 11 Bitcoin ETFs. And then a point about Bitcoin IRAs. So when you have a retirement account, an individual retirement account, so there's tax deferred benefits or even tax-free growth opportunities to buy Bitcoin within this IRA container, high potential returns because we see Bitcoin historically moving up and to the right. We saw some of the price predictions. They're just predictions. Liking those predictions. Me, myself personally, the idea of diversification. So when you think even about IRAs and what assets you'd be investing in, it's stocks, bonds, a basket of assets, having another asset in the basket. Sometimes when one asset is down, another is up, but on balance, you're still doing well over time. You can sit on the sidelines of the volatility and just let the volatility percolate. This is money that you're not going to have for today, but in retirement, in addition to doing other things. This is a long-term play. This is what we talk about in the Investor Club and what I teach in From Cash to Crypto. And you want to keep abreast of regulatory changes that impact Bitcoin IRAs, but I have students that have benefit. I don't own one personally at the moment, but I keep looking at them. And I'd like to see how that can be a part of my overall strategy as well. So in conclusion, let's talk about a few things, and I'll tell you about an opportunity to work with me, and let's go touch some grass today. That survival, this idea of the survival and lack idea and energy, it's fear, right? False evidence appearing real. It's not intended to be a long-term strategy. There's valuable evidence in fear. And our fear is a part of our human experience to have us give pause and have our heads up. But that doesn't mean inaction. That means, the fact because we fear what we don't understand, we want to not just be in a survival mode That's a temporary place. It was never meant to be permanent. And as again, I think about my own story, a little story time for you. I hope through my own journey and experience that will empower you to think more confidently about yourself and your ability when you have new information to make a new decision. Now, this is not me, but she could easily be me. She's adorable. She is obviously brilliant. She is carefully writing inside the lines here. Either of my parents would tell you this is exactly what I would do. One of my first things that I love to say early and often, I do it myself. I clean it up a little bit here. I'll do it myself, but I'm pretty sure I sounded like I do it myself. Like I wanted to do all the things by myself. I'm an only child. I'm my own best friend. And so this makes sense of why I kind of carefully curated my life through the years. I did well in school, got perfect grades, perfect extracurriculars, perfect resume, perfect jobs. I started clerking in the Third Circuit immediately after law school and then went to big law, ultimately have my own practice, then went into academia, and I've been in academia for about 16 years now. You could be perfect and yet perfectly miserable, coloring inside the lines. This idea of playing it safe over soul. In the moments that I didn't play safe over soul, some of my best moments. This is me, also adorable, slightly older. And I was performing performance poetry at the New Yorican in New York. Shout out to any spoken word artists and poets who are participating. This is me in a different time and space. This is one of my 11 jokes that I have had. This was not safe. This was soul over safe. I was around that time. I was working in big law. Thank you very much. And in big law in Philadelphia, where I was working, over the weekend, I had the opportunity to participate in Def Poetry Jam. Like some months before that, I was a finalist in Philly. And so I got to be an opener for a Def Jam artist. And the artist was Music Soul Child. And I don't want to overstate it. I was literally like the first of three openers. I was the opener to the opener to the opener to Music Soul Child, but I did it. And I was a Def Jam poet and supporting a Def Jam artist. So it is what it is. And I was also actually on the cover of a Weekender insert in probably in the Philadelphia Inquirer at the time. Monday, I go to work, big law, schlepping away. And the assigning partner comes in, his beet red face with the Weekender in his hand. This did not seem like it was going to be a good conversation, let's just say. He throws that across my desk, throws it, and says, if you have time for that, then you don't have time for this, meaning you must not be doing your work because you're out here living your best life as a Def Jam artist. Excuse me, a Def Jam poet. That delayed my growth because in that decision point, I chose safety over soul, safety over my signature piece called Find Your Own Shine. You can find that also on YouTube. My students do every semester, which makes me a very cool professor, I must say. But I want to encourage you also, this is me in one of my other jobs as well. From 91 to 95, I played professional tennis. I played on scholarship at Northwestern. And then from 91 to 95, I played professionally. I remember being the first seed in a very small tournament in Puerto Vallarta, of all places. Shout out to like the Love Boat, I think. And my best friend, shout out Carla Waddles, the executive producer of Bel Air. I want you all to watch season 3 is going to be amazing, but I digress. She came down. I lost in 3 sets. We drank a lot of tequila. I got my life together. And went to law school and ended up pretty great. This was a moment of not coloring inside the lines and also my athletic self, my creative self, my athletic self, taking risks, taking chances, and betting on myself. Playing it safe is great for adult coloring, I suppose, but it's not for the future of money. It's not for the future of your money. It's not leaning into innovation and the realities of change and being a first mover when everybody else is still wallowing in fear, right? The fact that you can get an advantage at this moment in your time, in your life, it was really the first for me. My involvement in crypto and blockchain as an educator and as a lawyer has transformed my life. I started in January of 2018 this law firm flew me out. I was at the University of New Hampshire School of Law at the time. I was also an associate dean at the time. And remember what I said, I started in the winter of 2017. By the end of January 2018, I had learned so much more than the average intellectual property lawyer that I was paid to go halfway around the world to speak to and teach intellectual property lawyers over in Thailand about the intersection of blockchain and crypto. That led to me presenting at the World Intellectual Property Organization, where I was teaching hundreds of attorneys and staff from WIPO in Geneva about the intersection, again, of intellectual property and blockchain. This was before I even was an investor. And so I want you to think this idea about investing is critically important. I've spent most of my time talking about this. That's not the only way to participate. Be the smartest person in the room at work, where you take a deep dive, just do a search. In fact, I have a new custom GPT that I want to share with you, cryptolawguide.ai. If you go there, whether you want to know law or not, but this is an example of how I used my expertise in crypto law with the latest technology, because we can't stay stagnant. We always have to reimagine, reskill, and upskill. I want to remain relevant for as long as I'm walking on this earth. Do the same thing about at the intersection. You can even use this custom GPT to ask, I'm an educator. What's going on in the blockchain and crypto space? I am a banker. I am a lawyer. I am a leader, right? I'm whatever it is. I'm a manager, whatever it is. Find out what's going on in your industry, and you can be the smartest person in the room and literally do this in a short period of time. I went from those experiences to creating the first blockchain, crypto, and law online certificate program. Law schools are still woefully behind, and so I got a lot of work to do, but I'm doing my part. I've gone around to do speaking engagements and media, even going on to the Hill. This was during some Libra coin hearings back in 2019, before the world was caught on fire by the pandemonium. All of these things have happened professionally, but then also personally because of my participation as a first mover in the crypto space, having a time in my life where I had a clean slate, debt free. And now I have managed debt, because debt is an important part of my portfolio too. Other people's money, love it, right? But being free from the type of debt that keeps you in financial bondage and slavery is something that I'm not willing to participate anymore. That is the key to wealth. That is the key to me returning to the place that I love most of all in the world, St. Martin. This means having a life of opportunity and leisure that is not possible when I have to be somewhere trading my time for money. It's the ability of buying my mom a home and not having a mortgage on it. These are the things that move you to the freedom. We're talking about crypto, but this is bigger than crypto. This is about where can I invest in order to be free? And there are a lot of different types of freedom. The freedom of time, the freedom of options. I'm going to leave from the law school, and I chose to do an unpaid leave so that I could teach only the things that I want to. And this year, that was blockchain, crypto, and law, while I ate, drank, and meditated my way around the world, eat, pray, love style. And also just sitting down somewhere, having time. Money, assets, value are infinite. Time is not. And if I continue to trade my time for money, I am not free. So, what does it look like to begin the process of creating a reasonable path to freedom? And that comes from a first mover advantage. Crypto is not the only way, but it should be an important part. And not all crypto is created equally. Again, I told you there are thousands of different ones. I hold very few. Bitcoin, ETH, maybe a few tokens, because I know the people or the project and I believe in it. Shout out a few trade and meme coins. All love. You like it, I love it. I have a bad thing to say. They rise and fall with their community. They rise and fall, kind of pump and dumps sometimes. So you have to stay on top of your meme coins. If you don't know what they are, don't worry about it right now. That's not for me at this point in my life. If I was 20 or 30, maybe. I have different goals and priorities to retire early and well. And that's what I want for you, is the opportunity where you can also decide if you want to continue learning with me and in my community. And so I'm going to put this in let me grab the link that's already hyperlinked right now for you to lean into working with me, join the community. The community is small and intentionally so, because as I work with 10 to 15 people tops, one time we got to 20 and then beyond, and got to be a little bit unwieldy because depending upon the level of your engagement, either on a DIY, you can do it all on your own. In fact, I will also share a coupon. This will be 50% off any level that I talk about. You can do it yourself and have access to all the modules, which is a fantastic way. You can join at a level where you continue to be a monthly member and have a higher level of access to the videos and all of the master classes, special offers, etc. Everybody would get a free copy of my book as well. I'll sign those. I do that whenever I run the master class, I get a lot of gifts for that. I feel like I have 32 books left in my house. You can get it anywhere where books are sold. But also for those who join at any level, I like to sign a book and send it to you as well. You get consulting, coaching, content, and an engaged community. And I want to shout out to some folks who came in early and stuck with the program and are now alums, and they weigh in as well. It was interesting with Brittany because she is well versed in finances and even crypto and blockchain as well. And she absolutely learned from that quadrant of what she didn't know that she didn't know, which is always so incredibly dangerous. That thing where we don't know that we don't know. So coming into the academy, going through the short course, having access to the videos, having access to me. If you join at the highest level, then you have one-on-ones with me once a month. Not insignificant, and that's why I have to keep the group very small, but we have some space now. So I've started to talk about it a bit more. Shout out to Dr. Walls, and I see Dr. Walls in the mix as well. And do you remember when you said these words? Wow, what a class. Informing, interesting, engaging. And you shoot straight. You shoot straight, Doc Walls, if you're still on and still with us. Excellent. I appreciate you, Doc. The idea of having this as your foundation is critically important. And what I love so much about so many of the alums, that they come back and they participate and they get up to speed and up to date. They're updating their plans and their portfolios and the way we move forward. And I think that's so incredibly important. So today, I want you to make sure that as your takeaway and kind of your homework is to start deciding what your story's path will be. Thinking about my path from someone in 2017, I wanted nothing to do with this space. I heard something about magic internet money. I'm like, yeah, I told you about my pedigree and education and profession. I have nothing to do with anything that's going to take me off of that track. But definitely as an educator, knowing intuitively, personally and professionally for my students, they had to be conversant. What will you do in terms of your story's path? What will you say about the you that's at this decision point in 3 months, in a year, in 3 years, in 5 years, in 10? We're playing the long game here, and you want to be at the head of the curve. And this needs to be you, and it takes a little bit at this moment in time to be the smartest person in the room. If you're committing not just today to what your next right action will be, as a matter of a next step, it could be to buy Digital Money Demystified. I'm going to share in the chat a link to all of my links. So it might be buying Digital Money Demystified. It might be becoming an insider today and saving 50% off of any membership or opportunity or experience, because there's one that doesn't require a membership. You just have access, and it's lifetime access. Going to the links page that will give you access to news and trend report, the YouTube channel, future master classes as well, a direct link to my podcast for sure. And I want to talk a bit and answer your questions about embracing your financial future. And then I'll talk about a few of the questions that came in before this masterclass. Becoming an insider is important for all the reasons that we have mentioned about continuing learning in a safe and nurturing environment, not with a carnival barker that says all crypto all the time, but also not with a naysayer that keeps you on the sidelines, and not as a first mover, and kind of in a position of fear of getting in, which can be as detrimental as the fear of missing out, where folks fear of missing out, you just throw your money somewhere and hope it works out. And that's not what we're doing here as well. You want coaching, you want consulting, you want a community, and you want curated content. Because after, we're past the information age. There's more information that we could shake a stick at. All of the years that we were participating in those free apps and programs, they were culling all of our data and putting it back out on the internet. This is what we see with artificial intelligence as well. No shortage of information. The question is, can you make sense of it on your own? Can you make sense of it by just going to YouTube University, or just watching CNBC, or just reading the information at CoinDesk.com? Or do you want a curated experience where you can compress the amount of time that takes you to get up and running, and also in a protected environment where you continue to ask questions, continue to be supported with the latest information? So this idea of just the cherry picking and the buckshot way, that was not helpful to me at all. I suspect for you it's the same. Shout out to Doc Walls. Absolutely, I feel the same. One of the folks in the, I'm kind of curating now for you and summing up most of the questions. If they didn't deal specifically with ETFs or something substantive, it was just like, I'm going to come, but I don't understand crypto because it seems just like really too complicated. But that's the reason that we break down complex concepts and do so in an easy to understand way. There's a glossary of terms, but I work really hard to not use a lot of terminology. Sometimes it's challenging, and I certainly did on this. That's what the program's for. It's for folks where you're completely new to the space, or you're an investor, a traditional investor, and you want to look at your options, or the person who has some crypto and wants to figure out what next. Like, how do I go from just owning crypto to leveraging it in decentralized finance? Again, as a board member for Digital Currency Group and having 200 companies in our portfolio and wholly owning 3, I've learned a lot about the what's next of decentralized finance, where you have an asset, but now I can lock it up and take out a loan in the same way I would take out equity in a home, right? Which is not, taxed in that way. That's really, really powerful. What's next? This is a great opportunity. Continuous support as well. One person in some form or fashion says that they're really worried about losing money. And this is critically important. I have no intention of losing money, but also hedging my bets across a portfolio, focusing on risk management strategies and tailored cryptocurrency investing. Assessing, we have a risk assessment tool early on in the process that will lead you to do your own research conclusions about what might be best for you. And that's really to educate and to empower you to make informed decisions, so that you're not missing opportunities because you're afraid of getting in. I hear this a lot. It sounds great, Professor, but I just do not have time to learn something new. If you're saying you don't have time, that must mean that you are trading your time for money. Consider the possibility that you have nothing but time, because you are now buying your freedom by investing and learning something new. Time is critically valuable. Absolutely. It's the only finite thing that I can think of. That is exactly the way that the entire program and your opportunities. That's why we don't have something every day or even every week, that you have access when you have the time, but also you're connected to community and you have a regular schedule. There's no exam at the end. The only thing that you get is more opportunity and more confidence, learning from a platform that you can access anytime and anywhere. If you go again to the offer page, what you will see is that the entry level of the curated but self-guided approach to your learning and earning. That's $9.97 with the Fit 50. I'll drop this again with the Fit 50 coupon code. 50% off of any experience. So that takes it down by half immediately. If you do that through the weekend. This is time sensitive for the Fit 50. You can join at any time and just pay the regular price, $9.97 for the entry, all the way up to the VIP, which is $24.97 a month, in half if you join this weekend as well, and getting the copy of the book and some other awesome bonuses. The market is too unstable. Well, we've definitely already talked about that. And I'm actually really excited when I see a price pullback, because that makes my dollar cost averaging into Bitcoin even more valuable. I am accumulating more at a better cost basis. And over time, that's going to yield significant benefits. So yes, the market can be volatile. We laid the Bitcoin market trajectory over the Dow Jones and the S&P 500 and the New York Stock Exchange. They all move up and to the right. They all, in particular in the early years, were incredibly volatile. Then you had regulated markets come into view. Things settled down, more people came on board, which is what we're seeing in 2024, not just at the retail level, but at the institutional level with exchange traded funds. All of those funds have to keep Bitcoin on hand, which means they have to buy a lot of it, which again is, and that will not stop, that will continue. This week we had more inflows than outflows, and the price is starting to react accordingly. And so that's in a really exciting time when institutions are forced to buy Bitcoin. Bitcoin is scarce, becoming more scarce every year. And most people are still not in yet. It's a really great time. So you really have to focus on what your next right step will be. And I'm interested if you can share in the chat, what's your next right step? Is it getting the book? Is it becoming an insider? Is it learning more about insiders? Is it, watching on YouTube? Is it subscribing to the podcast? What is your next right step? Are you going to show confidence and belief in yourself in this moment going forward? Are you setting up the you of 5 years and 10 years and 20 years and, God willing, double nickel years of doing the things that you want with the people whom you love? And not trading your time for money, thinking about a program, thinking about an investment, thinking about an opportunity that moves you from where you are today to where you want to be, watching CNBC on a regular basis. What is your next right step? Here, again, you see from Cash to Crypto program, your Learn to Earn journey, the coaching and the community, and the content in a curated way that really supports you is really, really important. Here's a QR code for you. Again, you can go straight to the opportunity at advantageevans.com/offer. If you sign up for any level at this point in time, you will save 50%. And so, first of all, that is fantastic in terms of savings. You can learn more about what is in from Cash to Crypto, the entire program experience. If you sign up this weekend, you get a signed copy of Digital Money Demystified to immediately jumpstart your education. You are going to save 50% with Fit 50 on any level. You will have instant access. I'm going to throw this in as well. Ready Wallet launch. Remember, we talked about setting up your wallet so that you are empowered, so that you learn the difference between an exchange and a wallet, the difference between cold storage wallet and hot, the difference between that and exchange traded funds, how to set up and get started immediately. And that's the Ready Wallet launch challenge. Usually that's $297. I will add that as bonuses this weekend. So it's Digital Money Demystified, 50% off, instant access to Ready Wallet launch, so that just in a few hours, actually in less than an hour, you'll be able to set up your wallet, understand the different types, reassess whether you want to keep the wallets that you have, or maybe have a diversity of wallets. So again, all of your eggs are not in one basket. Joining the Explore program usually is $997. This weekend, it's $498.50, half off. at the core level where you not only have the monthly AMAs, but also continuing expert insights, community engagement. You become a part of the community on a monthly basis. You have access to the resource library, your feedback opportunities in the community, and that is ordinarily $14.97. You can join this weekend for $748.50. And then a small membership fee going forward, or all the bells and whistles where you have monthly one-on-ones with me, in addition to all of those other things, the ongoing access to the Ask Me Anything library, priority access to new content and updates, direct contact with me, but also some of my expert friends. I kind of get like a backstage pass when I'm recording my podcast. So that's like high engagement, and you're up and running, and you're going from where you are today and you're supercharging it. You're not doing this 1x and kind of 2x incremental. You're going exponential. That's 2x to 10x, one of my favorite books. You're ready to rock and roll. You're actually ready to set things up. You've been tinkering around the edges and you want to get very serious and go from traditional crypto holding, Bitcoin in particular, into decentralized finance where you become your own bank, not beholden to any person, any institution, any government. And this is a great hedge against things that you have less control over. So that would be less than the core experience, actually, if you get it today, by $1248.50. So go to advantageevans.com/offer. And then you can also see not just the offer, but some of the resources as well. This will also be where a limited opportunity for the replay will be. So look out for an email from me. I'm excited for you. Final question, did I leave you better than I found you today? We did a plus 10 earlier, so let's just go for both. Plus 100, plus 100. Let's do that. It's my pleasure, Quentin. I appreciate you. And I look forward to following up with you as well. Dr. Walls, better than I found you. And you've been around for a minute. So you're like going forward. Bonnie, amazing. All right, folks, this is it. Now, I want you to take your next right step, whatever that is. Again, please look out for an email from me. Until next time, be good to yourself and others and continue to shine. Let's go be our own bank. The future is now, and it begins with you. Thanks so much.